Jaco Jordaan, we received an underwhelming March jobs report last Friday. So with that in mind, what's your view of the economy?
You know, I think the economy will snap back. We did get an underwhelming jobs number, 126,000 last Friday. That was the first time in 12 months that we were under 200,000. But there's some transient factors in there. We had a cold weather up here. We've got a port strike out in the west. But I think that if you take a look at consumer confidence, if you take a look at some of the other elements turning more to a cyclical economy, the economy's going to snap back.
All right, so it didn't make you rethink your view of the markets? Do you think the markets are fairly valued now, undervalued, overvalued? Where's the stock market?
I think the stock market is fairly valued in the context of low interest rates. There are definitely a couple of areas that are a little bit expensive out there right now. If you take a look at, as example, Staples, I don't know that it warrants a 23 multiple out there, especially relative to some other sectors that are a little bit more attractive.
All right, talk about those attractive sectors. Where should I put my money right now after a flat first quarter in the S&P?
Yeah, well, I think what you have to think about is what do you think is going to happen in the economy? If you think it's going to improve and jobs are going to pick up and maybe we're on the cusp of a little bit of wage inflation right now, then you want to turn your portfolio more towards a cyclical exposure. So that might be consumer discretionary, that might be technology stocks, financials, and those, from a valuation perspective, are some of the more attractive areas, and they are also the areas that have potential for growth over the next couple of years.
And what's your view of biotech? This has been the one sector which a lot of people have jumped on. It's a hot sector.
Absolutely.
Time to get off it?
I think you have to be very careful. There's going to be winners and losers in biotech. Healthcare overall selling at a multiple of about 24, so it's pretty expensive. Biotech is even over and above that, and for warranted reasons. You know, there's some exciting stuff going on in healthcare and in particular in medicine out there. Some companies are going to get that right and some are going to strike out. So I want to use an active manager that's going to be able to get in there and select the companies that are actually going to survive and make those future profits.
And what about investing abroad? Is Europe or Japan better than the U.S. at this juncture because of the declining euro and yen?
Yeah, absolutely. I think if you take a look at Europe and Japan, you kind of have to say, okay, well, where was the U.S. a couple of years ago? And maybe now they're getting to that point. So we're looking at quantitative easing out of the ECB. The euro has dropped in value. That is currently helping Germany and a lot of the exporters that are coming out of Europe. In Japan, also getting a little bit of help there from quantitative easing on that side, but I think you have to be a little bit more careful because of the way that the government is investing in pensions. So Japan is strongest area in international markets, up over 10% on a year-to-date basis, but I think there may be a little bit of an artificial demand there because of the government buying on the pension side.
And then finally, what about emerging markets? What's your stance on those?
You know, emerging markets continues to be attractive. Long run, it's definitely the place to be. You have these huge population centers out there. The urbanization in those markets are going to increase the per capita GDP, per capita income for those. So that's where you want to be. But you have to be very, very selective in where you get that exposure, because just because the region's going to do well doesn't mean every single stock there is going to do well. So again, at HD Vest, what we're looking for are active managers that can go in there, select those specific stocks that are going to do well given the underlying demographic trends.
All right, thanks a lot, Jaco.
Thank you very much, Greg.
Thank you for watching The Street.